The rally continues on Wall Street as the S&P 500 and the Nasdaq register their longest winning streak since 2021. Treasury yields to slip in trade stocks in the Asia Pacific open with gains. The GIFT Nifty is also indicating a higher start for the Indian market. Crude prices cracked, slump over 4% overnight to around $82 a barrel as global economic data overshadows the threat of the Israel-Hamas war escalating. And Indigo tells CNBC TV 18 that it expects to have over 70 planes grounded by March of 2024. The airline currently has over 40 planes grounded and expects to add 30 to 35 more due to the ongoing engine issue with Pratt & Whitney. The airline, however, maintains its capacity growth guidance for FY24 above the mid-teens and says it is taking steps to mitigate capacity constraints. In key earnings to track today, watch for numbers from Tata Power, United Spirits and Lupin. From the broader market, Bata and Pidilite will also report Q2 earnings. And in an innings being termed by many as the greatest ever in a one-day international, an injury hit Glenn Maxwell scores Australia's first ever double century from an impossible position of 91 for the loss of 7 wickets to chase down 291 runs against Afghanistan, propelling Australia into the semi-finals of the Cricket World Cup. Good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you this Wednesday morning. There's a lot for us to track about. But first up, the global market handover once again from the US has been very positive. On the back of that, you have a lot of the Asian markets which are trading well right now. So what's holding up quite nicely is the Taiwanese index, Hang Seng, also seeing a bit of a gain over there. So Hong Kong has actually slipped in just the past 2 minutes or so, but it's absolutely flat over there. Actually, for most of the Asian markets, it's a very flat kind of opening to trade. So Hong Kong, like you can see, is just around 6%, 6 points in the red. You also have Shanghai Kospi, which have just now moved a little bit lower. So they're seeing a little bit of red too, but very flat. It's not too much of a cut. And these are all markets that saw a little bit of a cut coming through yesterday as well. The Nikkei market, for instance, that was the one which saw a 450-point cut. So that is the one which has corrected very significantly. And right now, it's up over 150 points. So it is reversing a little bit of the pain that we saw yesterday. In terms of our own market, the open could be maybe just a little bit higher. The implied open for our own markets is around 20 points in the green right now, 26 points. That is where the Nifty could open after we got that, very minor cut at the end of the trading session. But it'll be interesting to see how the session pans out because crude prices have corrected over 4% overnight, which of course for our own markets is a big, big positive. But with that, let's also move on and talk about the US now because Wall Street ended Tuesday with the S&P 500 and the Nasdaq both notching their longest ever winning streak in 2 years. The Dow Jones was also up around 56 points, and this is the 7th straight day of gains that we've seen for the Dow, and for the first time since July as well. So that big rally really continues in the US. The S&P 500 was up around 0.3% like you can see. And you had the Nasdaq, which once again did the best. It was up almost 1%. Now, the technology stocks, like we were pointing out, moved higher because the yields also pulled back. The 10-year Treasury yield lost around 9 points, and it's currently at around 4.58. So that is important to track from the US. But let's also bring you some opinion. This comes in from Fed officials and key market watchers on the state of the US market and which way they think the Fed should move next. Listen in.
I've been saying for months that the thing that we want to be paying attention to as you look at the mandate, that by law, we want to stabilize prices and maximize employment. I've been saying for months, be careful looking at the traditional side of if growth is high, if the job market is strong, and we're creating a lot of jobs, that means demand overheating, because I've thought these supply shocks are working their way through. That the overwhelming thing we need to do is pay attention to inflation and get the inflation down. The employment side of the mandate's going well. It's been the inflation's been the problem. And I just want to emphasize, inflation has come down a lot. First thing is you gotta try to look through 2-week movements of any variable. And that's true for long rates, that's true for short rates, that's true for 1 month's data set. So I'm trying not to get overly worked up about tweak movements. if the long rates are sustained at high levels, that is most likely tightening. I mean, it depends partly why the rates are going up. But if that's coming from term premium and it's tightening, then we got to take that into account. We should expect that to see that with the lag working its way through the economy. So we're all paying attention and trying to figure out what's driving it.
And I think what's critical is for the Fed, the ECB, and the Bank of England to take a much longer view as to where they are on the rate cycle, recognize that they're done, that they've done enough, and sit back and worry about other more strategic issues. And they need to stop being volatility enhancers. You know, this unusual volatility in the bond market is not good for the economy. It can break something, and it undermines the standing of the US in global financial markets.
The economy is slowing. I think the GDP numbers have been quite choppy in this cycle. I think if you look at the payroll growth numbers or the hours worked numbers, I think that gives you a more faithful representation of the economy, which is that we are gradually slowing as we go toward the end of the year. We do think we maintain positive growth next year, so we're not in the recession camp, but certainly you highlighted some of the risks there with issues around the banking sector a few moments ago. But we do think we're slowing, and that the Q3 bounce in GDP, which was really quite impressive, was a bit aberrational as well.
All right, that is some important market opinion and everything that we're looking at globally. But let's now talk about what this really means for our own markets and the domestic cues that you need to track as well before the market open. We have our research team here with the trade setup. Mangalam, Ekta and Surbhi all join me now. Guys, a very good morning to all of you. Ekta, let me come to you first. The handover from the US has been quite positive, but take us through everything we should track because there are a whole host of important domestic cues as well.
Thanks for that. Well, yes, absolutely. So we had the Sensex and the Nifty, which closed with minor cuts after what was largely a range-bound session yesterday. The broader markets closed with minor gains as well. We had net the institutions buy because the DII's net bought around 700 crores. FII's net sold close to 500 odd crores. Now, the big cue overnight is that Brent crude has fallen around 4.2%. It's at or $3.57 on an absolute basis. Lowest prices since July. The US markets closed higher. The stocks such as Microsoft are at all-time high, so the sentiment is positive. Plus Brent crude lower. It's definitely a net positive for us because we are importers of Brent crude. Asia mixed at this point in time. Gift Nifty indicating maybe a flat start. We could probably see consolidation, a positive bias, simply because we have already run up quite significantly from the October 26th lows. Now, in terms of earnings, we have a lot of earnings today, fag end of the earnings season, so a lot to watch out for. Bata, Lupin, Pidilite, United Spirits, PI Industries are just to name a few. Nifty levels to keep a track on: the 20 DMA 19,411, the 100 DMA 19,455, and the 50 DMA, which is at 19,560.
All right, those are some important levels to track. Ekta, thanks a lot for getting us all of those cues. Let's also talk about the individual stocks that are going to be in focus today. Surbhi is here with that list. Surbhi, the last of the big earnings coming through.
That's right, it's a long list. First, let's start with Shree Cement, and it was mostly an inline set of numbers. Revenue at 4585 crores, EBITDA at 870 crores, and margins at 19% versus our poll of 19.6%. Cummins, it was a margin-led beat. Revenue was down nearly 3%, EBITDA was up 17%, and margins were up nearly 300 basis points. IRCTC, revenue up 24%, EBITDA up 20%, and PAT up 30% on a year-on-year basis. Deepak Nitrite, it was a good set of numbers. Revenue down 9%, but EBITDA up 11% and margins at 17% versus 14% same time last year. Apollo Tyres, the numbers are slightly below our poll. Revenue up 5.4%, EBITDA up 63%, and margins at 18.5% versus our poll of 17%. Hindalco will also be on our focus radar today because of the Novelis numbers. The numbers were good. The volumes have improved sequentially, and EBITDA per ton is back to $500 sooner than what it had guided. There will be some other companies reacting to numbers like Balram Puccini, Stovecraft, Greaves Cotton, and Midani, just to name a few.
Okay, that is a long list of stocks. Surabhi, thanks a lot for taking us through all of that action. But finally, let's talk about cues from the futures and options space as well. Mangalam is here with that. Mangalam, we did close at the high point of the day and above that 19,400 mark as well.
Yes, the last tick was actually in the green. Had it not been for the averaging of the last 30 minutes, the Nifty would have actually closed in the green itself. A 100-point recovery is what we saw from the lows. And this morning, we're coming in with good global cues and global setup as well. The important part in yesterday's trading session was the Nifty Bank's recovery. For most part of the day, it was the Nifty Bank which was underperforming. And in the last hour, you see the Nifty Financial Services and the Nifty Bank, both of them leading the markets higher. It was the Nifty Financial Services expiry as well. Now, for the second day running, the Nifty has closed virtually at the 20-day moving average. The day before yesterday, it was 19,411. Yesterday, it was 19,406 itself. We also saw thinning of FII selling in the cash market, so they sold just sub 500 odd crores. And while they bought around just 125 crores in index futures, remember they've been covering a lot of their short positions. And yesterday as well was no different. They covered about 2,500 short positions, as a result of which their short exposure still at 80% with long exposure at 20% too. On the option side, the active option on the Nifty is 19,450. The GIFT Nifty is indicating a positive start. So, levels around that 19,500 mark is something that we'll watch out for. 19,550 call also is in focus, as if the Nifty crosses past the 19,500 mark comfortably, we can see further short covering, and it could take the market all the way up to 19,600, 19,700, and we've seen some punt buying at the 19,850 call as well. But there is firm support at lower levels. 19,250 put, for instance, has seen a lot of writing as well. The Nifty Bank will be the most important thing to watch out for, because yesterday it bounced off the 200-day moving average, conquered the 20-day moving average, and today is Nifty Bank weekly options expiry, where you have room all the way up to 44,100 thereabouts, and at the lower level there is strong support at 43,500 itself. In terms of stocks, two kinds of stocks I'm watching out for. One, a big mover yesterday was Trent after strong results. A lot of long positions added out there. Let's see how the follow-up on that stock is. And secondly, a lot of long positions added on HPCL and IOC post their results. So let's see how the refiners play out as well. And we have the overnight decline in crude, so we see further upside on all these refiners.
All right, that'll be interesting to track. Mangalam, thanks a lot for getting us all of those cues. With that, it is time for a short break. But like we've been pointing out, the big cue, the big trigger for our own markets is that we've seen a 4% cut in crude prices overnight. We're going to tell you why and which way prices could be headed when we come back. Welcome back. You're still tuned into Power Breakfast. Now, like we've been pointing out, the big trigger for our own markets is that crude has pulled back a full 4% overnight. So Manisha's here with an update. Manisha, we're just above 81 now. It wasn't too long ago that we were talking about 95, 96 on crude.
Oh, well, absolutely. And it was only last month in October, Pavitra, that we were trading at a high of a 96 as well. But yeah, most of the war premium is now off the markets, and we are hitting $80, as you said. We are down by 4% in this week. We fell 6% in the previous week as well. So the decline clearly has been very sharp for the crude prices, so much so that it's brought us to a 3-month lows for the Brent crude prices on where it's trading right now. Also, there is a big rise in the U.S. inventories. The Chinese data did not come in so strong. And then the markets also are dealing with a strong U.S. dollar index, which has rebounded from a 6-week lows. That also seems to be weighing onto the markets. And that is exactly the reason that you have seen decline in other commodities also. So precious metal prices declined quite sharply. The base metals also have seen a decline of 0.5 to 1.5% overnight. So whether it's about copper, aluminum, zinc, we've seen all of these metals also come off. So most of the commodity sector in Asia has started on a weaker note.
Okay, got that. Manisha, thanks a lot for taking us through that update on the commodities. But with that, let's also bring you some important news from the aviation sector. Indigo is expecting 30 to 35 of its planes to be grounded by March of 2024. This is in addition to the existing grounded planes. This as engine supplier Pratt & Whitney accelerates the removal of engines for inspection. Now, based on this, the airline will have nearly 70 planes grounded by March 2024. And this includes planes that are grounded for maintenance reasons as well. However, despite the setback, the management is maintaining its capacity guidance growth for FY24 in the north of mid-teens space. So that is on Indigo, and it'll be interesting to see how the stock moves in trade today as well. But with that, it is time for a short break. As we do that, it's that special time of the year again. And as the festive season draws near, we at CNBC TV 18 want to help you have a prosperous summer 2080. And to do this, my colleague Surbhi caught up with a whole host of market experts and got in a word on their investment plans for the upcoming year. Listen in.
Let me ask you where you gentlemen will put your own money to work. It's like a one-line question to all of you. Where are you investing this year? Mihir?
I would obviously go for equities.
And what type of fund? Give us something more specific.
No, so as I said, I am growth biased. Okay. So flexi-cap is the best strategy for me.
Okay.
Because then I can pick and choose, which segments.
So you're going the flexi.
See, India has ample scope for stock picking.
Okay, so going for growth. Naren, where would you put your money?
All types of hybrid funds.
Hybrid funds this year, huh? And Nilesh, what about you?
मैम 100 रुपया मिलता है, 39 रुपये सरकार लेके जाती है, 10 रुपया EPFO लेके जाता है, 10 रुपया NPS लेके जाता है, 20 रुपया I have to put into skin in the game circular from overnight fund all the way to the large, the sectoral fund. बाकी जो पैसा रहा बीवी को दे देता हूँ. So I have no money.
Welcome back. You're still tuned into Power Breakfast, and let's now talk about the air pollution in the Delhi NCR region, which continues to remain in the hazardous category. Delhi Chief Minister Arvind Kejriwal chaired a high-level meeting yesterday, and the government will be implementing the odd-even policy from the 13th of November up until the 20th of November. Next week, the state government has also announced a work-from-home policy for 50% of the government staff until further notice, and the air quality situation remains very tough in Delhi. In fact, the situation in Mumbai is also quite critical, and it has not really improved, with many parts of the city still reporting an AQI above 200. So that really persists both in Mumbai and Delhi. We're going to keep bringing you updates on this front. But another update I want to bring you, and this is some fantastic news from the world of the world of sports, is that in what many are calling the greatest ODI innings of all time, an injury hit Glenn Maxwell scored a 128-ball double century to propel Australia into the World Cup semi-finals. The Aussies, 7 wickets down for only 91 runs, were staring at defeat, needing 201 more runs when captain Pat Cummins walked in. Already on 22, an injury hit Maxwell scored 179 more runs to take Australia across the line and into the semi-finals. In contrast, captain Pat Cummins, who partnered Maxwell till the end, scored only 12 runs of the 68 balls that he faced. So that was really a fantastic match to watch, and the batting skills in full display over there from Glenn Maxwell. But on that note, we're completely out of time on this edition of Power Breakfast. I do want to take a quick check on what's going on across Asia, because there's not too much in terms of a move, but it's quite balanced. You do have the Nikkei, which is trading well, around 100 points higher right now. Taiwan, Hang Seng in the green. But apart from that, you have Kospi, Straits, Shanghai, which are all seeing cuts. It's not too bad at all, but just a little bit of a pullback that you're getting in those markets. For our own markets, the implied open is around 20 points in the green right now. So that will come up for you around 36 points higher. So it has moved up a little bit more. But that's all that we have on this edition of Power Breakfast. Thanks for tuning in. Bazaar Morning Call comes up next.